Hey, what's up guys? John here. What the White House is doing right now says everything about what is to come for the real estate market.
The Biden administration wants to convert empty office buildings into affordable housing units.
Developers are converting offices into apartments at a record rate.
And just so happens that the most successful real estate firm in the world, Blackstone, they're doing something that would really work hand in hand with what the White House is doing. It's going to restructure everything we know about commercial real estate. The residential real estate market is going to have a big impact on bank lending, on credit cards, on auto loans, on business loans, you name it. If you need loans coming soon, you have to pay attention to what they're doing because this is going to change everything we know about the economy. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's happening. And if you'd like to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer in American history. It started in 2020. It's been ramping up the last couple of years. You're probably feeling it going to the grocery store and paying every other bill. It's going to continue to likely get a lot worse. And what happens when things get worse? People are forced to sell assets. You're going to want great credit to take advantage of what I think is going to be a massive opportunity to invest. If you have issues on your credit report, late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Take a look at this. So you may have seen this. American banker, big commercial real estate downturn could sink 300 banks. Well, the Wall Street Journal came out about a month ago, and they said the money has stopped flowing to commercial real estate. Now, people don't understand how big of a bubble was formed in commercial real estate with bank lending over the last couple of years. So much so, these banks aren't getting their money out. They're sitting on a lot of losses. $2.5 trillion in America has to get refinanced over the next 3 years. $2.5 trillion. So what does that mean? Well, banks they're not going to be able to lend on this because a lot of these deals don't pencil. They're going to take the deals back. They're going to pull these deals back, and the White House, what they're going to do is very revealing. So look at this. Look at this. Banks aren't ready for their loan reckoning coming, right? But look at Steven Schwarzman, CEO of Blackstone, right? They founded Invitation Homes in 2011, and between 2009 and 2011, really ramped up during that period. Purchased 80,000 houses, 80,000 homes. They're one of the biggest commercial real estate investors in the world. And they say that their plans to spend billions buying up dorms, warehouses, data centers across Europe. We have enormous capital and can buy the types of real estate that we like. Well, just so happens that in April, they raised a $30 billion real estate fund, the biggest real estate fund ever raised on this earth. They raised it, right? So you start to think, what are the odds? They're raising it at this moment. Why? Why are they doing this? Because they know banks are going to tighten up dramatically. There's going to be very, very, very little options. People are going to be forced to sell. And when they have to sell, and Blackstone's sitting on a Mount Everest of cash with $30 billion, then we're able to go out there and pick up tons and tons and tons of deals. Just to show you how big of a bubble we were in, look at this asset right here. $288 million, right? Guess how many units this property would be? It's only 264 units. So for context, it's over $1 million in debt per unit. So they would have to rent now with 7-8% interest rates. They'd have to rent these units out for, call it $8,000, $9,000 a month, right? Like maybe these units would rent for $2,000, hypothetically, $3,000 maximum, maybe, right? Well, what does this mean? It means that of this $288 million, how much would a bank lose on this type of deal? 125 million? 150 million, 200 million, right? The sky's the limit. They're going to get absolutely crushed. And this is just one deal. Here's another one. And I thought maybe this could be fake. Maybe there's no way a bank would lend this. Well, BizNow, same deal, same situation, 288 million. So yeah, this is real. San Francisco, this property right here, beautiful looking asset. This looks like a beautiful trophy property. Well, this property in 2015 sold for $122 million or $552,000 a unit. $500,000 a unit in San Francisco, not bad, right? It's not great, not bad. Now, $300,000 a unit, it just sold for $69 million. So the bank basically just took a $70 million haircut. Maybe some of that, maybe the investor, they purchased it for $122 million. Maybe they took out a loan for $90 million. So maybe the investor lost, and then maybe the bank just took a $20, $30 million haircut. You don't know. You don't know if they refinanced in 2020, 2021, when everything was booming and there's even more debt on the property than what they initially paid for. But when you start to look at what's going on here and what they're warning, and this came out today, so London, and this just aligns so well with Blackstone, what they're saying. M&G Real Estate Forecast. It is a matter of time before global property markets face greater volumes of forced selling, with banks increasingly reluctant to refi troubled or lower quality assets at current interest rates. Property developers in China, Germany, and Sweden have particularly suffered as a result of sharp rise of borrowing costs in recent years, with some projects financed at rock bottom rates now close to or breaching key loan terms. We've had it really good for the last 25 years, but now financing costs are higher and returns will have to come either from rental growth or from adding value to properties. We're in a new period of real estate investment that will require a new mindset because you're going to see new pricing. That's what's going to happen. I mean, CNBC is reporting right here. They say that the U.S. housing market has never recovered from the financial crash, right? And they go on to say that CoStar estimates that there's still over half of the leases executed in 2020 are set to expire. So you're going to start seeing a wave of people not renewing their leases, meaning a lot more inventory is going to come on the market, meaning smaller companies are out there looking for leases. As a lot more inventory hits, prices are going to continue coming down at a time in which they're going to have to refinance these properties, which is going to mean banks are going to see these properties are even worth less than maybe they're presently worth, right, as 2024 rolls in. So I started looking into this, and I'm like, the Whitehouse office to residential conversions. I want to see maybe there's some new news on this that we can talk about. And this came out October 30th, and you have to look at this website. Like, you can't make this stuff up, right? So you click on this, and you start to look at the website, what's happening. Whitehouse advances office to residential conversions with new resources. The guidance, financing, and technical assistance aim to address a 30-year high in office vacancies and ease the affordable housing crisis. The Biden administration on Friday threw its support behind, and they're also lending $40 billion on this, by the way, for investors to go out there and to convert these properties at below market interest rates. So they're having, think about this, if you're a real estate investor, if you are someone that has a government contract for construction, if you're someone that can go out there and take over these distressed assets, take cheap money, go bring them up to code, and bring in a whole new type of revenue stream from these assets and refinance that capital out, people are going to make an absolute killing, right? But with it, there's going to be a lot of change to neighborhoods, and not just, in certain pockets. I'm talking about worldwide. Look at this. I'll show you this. These are the areas in where this is all going to be happening. So this is worldwide. So when you look at how this is all going to plan out, behind efforts to turn empty commercial buildings into housing, announces new federal resources to support commercial residential conversion projects, new financing, technical assistance, and guidance for states, localities, transit agencies, and developers are among new resources. The U.S. General Service Administration will also expand efforts to sell empty federal buildings that could be repurposed into housing. U.S. office vacancies reached a 30-year high of 18.2% in the second quarter of 2023, taking a toll on local economies, according to Whitehouse. What people don't realize is when a property, let's say, for example, traded in 2020 for $300 million, and then, now it trades for $150 million hypothetically. Many people think, hey, it's just the bank that lost, an arm and a leg, and the investor. What they don't realize is that the actual tax base fell by 50%. And that tax revenue funds schools, street services, police departments, neighborhoods stay intact because of this tax revenue. So as we start to see a lot of these cities worldwide start to have massive repricing, you're going to start to see crime continue to ramp up as inflation and the cost of the world gets more expensive. So this is why when they say smart, it's right here. They're going to be moving into technology. They're going to be moving into all these different innovations. And it says it right here, tech and data, right? This is where everything's going to be moving into. And when you look at these headlines right here, and then you go here and you look at what they have planned, it's very, very, very revealing. So like what we do, energy in buildings, for example, they discuss, enforcing building codes for, to keep things very green, right? That's what they want to do, include measures to reduce embodied emissions, right? So it's all right here, right on the website. This is what's going to happen. So we're going to see this hit like a ton of bricks, or house of cards going to fall down, and as this real estate market continues to go. And you have $900 billion in real estate loans maturing in the next 2 years in this specific market, right? So in that specific market, $900 billion maturing loans, the next wave of distress. So I believe what we're going to start to see here is going to be a massive tightening of credit across commercial real estate. I think that banks are going to be very, very, very careful with whom they lend money to, what entities they've lent money to. There was even a billionaire, David Sachs, he's on the All In podcast. He came out saying, yeah, I have a $15 million property in San Francisco. I owed $9 million on it. I have to refinance it by the end of the year. The bank was only willing to lend me 2.6. 2.6 on a $15 million property. Now maybe he's wrong. Maybe the property is not worth 15. Maybe it's worth 7. Maybe it's worth 10, right? Maybe the market's changed. Maybe. But he's a billionaire. You have to think he probably has a great relationship with his bank, probably has a ton of money sitting in that bank, and he's probably going to be a lot more stable and secure to lend to than an everyday American or an everyday business, right? They're willing to lend him not even $3 million. You have to imagine what is going to happen when you're starting to see the types of deals like this starting to come to market and banks are taking all of these losses. They're going to really be careful on lending. So what do I think is going to happen? I think they're going to make a lot of opportunity. There's going to be a lot of opportunity for people to get into commercial real estate for people that have cash. But I think that the easy wins for everyday Americans over the next couple of years is going to be the duplexes, the triplexes, the fourplexes, those easy deals, because Fannie Mae and Freddie Mac, they have a 5% down payment program where you can go buy these properties, 5% down, you can go buy these properties, owner occupy one of the units, bring in cash flow from the other units. If you buy them right and you're able to reduce the overall expenses of the property, increase the rents on the adjacent units, the value of these properties will continue to rise. You could pull your money out plus some from that asset and invest and buy other properties. And if you build out enough of a moat around your investments, you might be able to pick up some distressed commercial deals, right? That's what's going to happen. We're going to walk into a massive chain of events that are going to unfold here in this housing market. And some people might not like the idea of increasing rents, or sure, right? We all want something affordable. But at the end of the day, you have to realize that 40% of all single-family homes in America are going to be owned by corporations. This isn't an opinion. CNBC reported on this. MetLife Insurance reported on this. So renting is not going to be a stable type of goal for someone long-term. It's a sad reality. Corporations are going to start buying up all the properties. So the goal should be to own a house or own a duplex, triplex, or fourplex over the next couple of years, have control over yourself, and have control over the actual expenses around your life. Because if you're renting, corporations are going to start, what do? What do corporations always do? They suck out every single dollar. That's what they do. Their goal is to become profitable, not to do the best job by their fellow American. Their job is to do the best job for their investors, and that's going to be to increase rent and to increase the actual cost on Americans. So you're going to want to invest. You're going to want to have a really good game plan, and you're going to want to have control over your cost going into this, because everything is about to change. What do you think about this? Drop below. Let's have a conversation about it. If you'd like to fix your credit to position yourself for the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. I'll catch you in the next one.